Hello, and welcome to the webinar on Directors' Roles and Responsibilities. My name is Rob Hughes, and I'm a Business Advisor on the New Start project at Social Business Wales. So an introduction to the webinar. This webinar will cover the topic of the roles and responsibilities of a director within a social enterprise setting, based on the 2006 Companies Act. It will give key advice to good practice relating to the role of a director. So an introduction to Social Business Wales New Start project. The Wales Co-operative Centre was established in 1982, and we've helped to strengthen and empower Welsh communities by supporting the growth of cooperatives and social enterprises. We deliver projects that provide skills and tackle exclusion. We deliver the New Start support programme under the banner of Social Business Wales. Social Business Wales is funded by the European Regional Development Fund and Welsh Government, and we are part of the Business Wales service. So what support does the New Start programme provide? It gives you a dedicated business advisor for one-to-one support with visioning, structure, incorporation, director training, governance and engagement, funding strategy, compliance and risk, and opening a bank account. So the Companies Act 2006, for the first time, a number of specific directors' duties are laid down within a Companies Act. Many of these new duties relate to areas covered by fiduciary duties within previous acts. So who is the company director? The role of a company director comes with a number of legal responsibilities, which are set out in the Companies Act 2006 and defined in the company's Articles of Association. A director is appointed by members, and directors are tasked with managing the day-to-day business activities such as company finances, administrative functions, on behalf and for the benefit of these members. Anyone can become a director, subject to some exceptions, which are age, capacity, and legal. There are three types of directors: non-executive directors, executive directors, and shadow directors. So general duties of a company director. Under the Companies Act 2006, sections 171 to 177, a company director has 7 general duties which are based on certain common law rules and equitable principles. These important statutory duties are: to act within powers. A director must act in accordance with the decision-making powers defined in the company's Articles of Association or Constitution, which is a governing document that outlines the rules and regulations for running the company. 2, to promote the success of the company. A director must act in good faith and in a manner that he or she considers most likely to promote the company's success for the benefit of its members as a whole. In doing so, the director must have regard for the consequences of his or her decisions on other stakeholders, including employees, creditors, suppliers, customers, and communities, as well as considering the impact on the environment, the reputation of the company, and the long-term success of the business. Number 3, to exercise independent judgment. A company director must exercise independent judgment by developing an informed view on the activities of the business, rather than simply enacting the demands of the majority of the members. Number 4, to exercise reasonable care, skill, and diligence. So company directors must exercise reasonable care, skill, and diligence whilst carrying out all functions of the role. This means that a director is expected to possess the general knowledge, skill, and experience that could be reasonably expected of a person appointed to carry out the functions of a director in a relation to a particular company, rather than being appointed purely on the merits of name or reputation. Number 5, to avoid conflicts of interest. Company directors must avoid or manage all situations in which they have or may have conflicts of interest that could affect their objectivity and loyalty to the company. Examples of such conflicts of interest include holding an advisory position in a firm that is a competitor of the company, acting as a director and or holding majority shares in a company that is or could be affected by the activity of the company. For example, that could be a supplier, a client, or a competitor of that company. Other business or personal relationships with individuals or other entities that are or could be affected by the activities of the company. And finally, taking advantage for their own personal gain of property, information, or opportunities belonging to the company, even if the company does not take advantage of those opportunities. Number 6, not to accept benefits from third parties. A director must not accept any benefits from third parties that are given because he or she is a director, or as a result of doing or refraining from doing anything as the director. In this context, the Companies Act 2006 defines third parties as a person other than the company, an associated body, corporate, or a person acting on behalf of the company, or an associated body corporate. And the final one, number 7, to declare interest in proposed transaction or arrangements. If a director is directly or indirectly interested in any proposed transactions or arrangements with the company, he or she must declare the nature and extent of such interest to the other company directors. So some general principles around the legal duties. A director is expected to show a level of care, diligence, and skill appropriate to their actual knowledge or expertise. Level of knowledge or expertise should be appropriate for the nature of the business, and they must be reasonably competent and comply with their fiduciary duties. And they must not allow the company to trade fraudulently, and where the company is in financial difficulties, they must not trade wrongfully. So look a little bit deeper into care, diligence, and skill. A director is not necessarily an expert, nor should he or she be presumed to have skills they do not possess simply by virtue of their office. A director need not devote their continuous attention to the business, and a director need only display, in relation to their duties, the reasonable care of an ordinary man or woman. A director is entitled to rely on other people, and where appropriate should be seen to rely on others. A director is not liable for errors of judgment. So fiduciary duties simply means that the director will act in good faith. A series of specific duties are identified to assist the director in meeting this requirement. To act in the best interest of the company as a whole, to provide the duty of confidentiality and personal interest. So wrongful and fraudulent trading. Wrongful trading occurs when the company is insolvent without a planned escape route or is in liquidation. The directors knew or ought to have concluded that there was no reasonable prospect of avoiding liquidation. It is important to remember that wrongful trading will only apply when all of the above points apply. Fraudulent trading occurs when the business of the company is carried on with the intent to defraud creditors. Any person who is party to it may be liable to a fine or even imprisonment. So disagreement among directors. Where a director believes a course of action decided by the board is either potentially damaging or improper, their duty to the company extends beyond an adverse vote and has 3 possible courses of action: a formal objection, a resignation, or an appeal to its members or shareholders. So alongside those legal duties, there are some additional duties and responsibilities of a company director, and they are as follows: registering for business tax, filing an annual confirmation statement, filing annual accounts with Companies House, filing company tax returns and annual accounts with Her Majesty's Revenue and Customs, and reporting company changes such as any change in your company's officers or their personal details, and any change to company's registered office and address, any registration of charges such as mortgages, and any change in a company's people with significant control details. Some of the above duties may be fulfilled by the company secretary, which we will cover later on in the webinar. Let's now look at people with significant control, or it's often shortened as PSC. A person with significant control is someone who owns or controls your company. They're sometimes called beneficial owners. A PSC must meet one or more of the following conditions of control. Most PSCs are likely to be people who hold more than 25% of voting rights in the company, and the right to appoint or remove the majority of the board of directors. Let's now look at the role of the company secretary. The company secretary is responsible for ensuring the smooth administration of the company, and they usually assume responsibility for the following important areas: compliance with corporate governance and other financial and legal regulations, management of shareholder administration and communications, and on some occasions, they can provide strategic advice to the company's board of directors. And here's a list of the core duties of a company secretary. Number 1, filing confirmation statements and other company returns. Number 2, maintaining the statutory books. Number 3, arranging directors and shareholders meetings. Number 4, informing Companies House when company details change. Number 5, maintaining the registered office address. Number 6, compliance with legal matters. Number 7, security of company documents. Number 8, communication with shareholders. And 9, signing legal documents. So away from this webinar, you could carry out a little exercise if you felt you wanted to. This would allow you to look at a company as a whole from a board of directors level. So appoint a secretary and any other officers you think you need. Identify one person as a director who has discovered the following issues: the PAYE and national insurance haven't been paid for 3 months. None of the staff are accepting responsibility for ensuring the PAYE and NI are paid. No one seems to have any idea what the company's financial position is, and the bank have rung to say there's not enough money in the company's accounts to pay the current month's wages. So as a board, agree the following. What are your immediate actions? What do you need to do over the next period? And what are the most important things that need to be done to ensure you remain within the law? And here is a little bit more further reading and advice that you can look at. And the first one there is Social Business Wales Governance Zone. On that website, you'll find a lot of useful guides which will give you advice on governance within your business and the role of the director and other people that sit on the board. The second one here is Duties of Company Director. This is a Companies House publication, and again, it gives you some useful advice around the role of the director. The fourth one down is a little bit more information about persons with significant control from Companies House. That gives you information on what it means to be a person with significant control. And the fifth one down there is from the Institute of Directors, which gives you an outline of the role of the company secretary. And the last one is from Unlimited, and it covers the area of appointing initial board members. A lot of this further reading advice is very useful, and it will aid today's webinar. And that ends the webinar on directors' roles and responsibilities. If you feel you need our support at Social Business Wales, please telephone us on 0300 111 5050, or you can visit our website at wales.coop, Social Business Wales New Start. And we're also accepting inquiries via email at sbwinquiries@wales.coop. Thank you for listening.